Welcome, Mr. Jaipuriar. A very, very strong dose of good quality coffee is what the markets need. And let's see how CCL products can help with this particular move. Let me just set the tone by reading out what your financials are, and then we'll come to discussing them. Quarterly net profit up 15% at 61 crores. Net sales rose 29% at 654 crores, and we've seen a very sharp increase in EBITDA at 107 crores, up 21%. EPS is up 4.56 versus 3.96, and the markets have handsomely rewarded CCL products. The company gave a return of 51% over the last 12 months. With this background in mind, Mr. Jaipuriar, welcome once again to Markets Today on Business Today Television. How do you see the next 2 or 3 quarters for CCL products?
Thank you, and thank you for inviting me here. So as far as next 2-3 quarters, the outlook is, we had given a guidance of 18 to 20% volume growth, and that is what we are expecting in the next 2 to 3 quarters as well. And in fact, if you were to follow our guidance since last year, we have said that in next couple of years as well, because of our aggressive growth plans and our aggressive capacity building, we will be looking at similar growth patterns in the next couple of years as well, which is close to around 18 to 20% volume growth.
Mr. Jaipuriar, would you like to comment on global coffee prices? That's the underlying strength of CCL products, and much of the business depends upon how global coffee prices move. At the moment, we've seen them, move from about 300 to 187. Would you comment on coffee prices, and then we'll again come back to CCL products?
So the world, the global coffee prices, the green coffee prices have been, volatile for some time now. And it looks like there are speculative tendencies that the markets are seeing as of now. And if you were to track the green coffee market, a lot depends on, the source production, which is, and the source countries, the big countries are Brazil, Vietnam, Indonesia. So whenever the crop happens or the crop gets harvested in these countries, that's the time you get to understand the pricing trends. So there was a little bit of a softening of prices in Brazil when the Brazil crop came last month. And but that softening was not seen in other parts of the globe. So coffee markets in Vietnam and Indonesia, they remain to be tight. And we are expecting that when the next crop cycle comes, or the next harvesting comes, which is in the month of December and January, which will happen both for Vietnam and Indian markets. Probably that is the time we will get to see, some more future trends, and that's the time we'll be able to comment if there is a certain amount of stability when it comes to prices of green coffee. But yes, as of now, the green coffee prices are at quite a high levels, and I would say historically we haven't seen such high levels for quite some time. So that's the outlook on the green coffee market globally.
In fact, the higher the climate change, the more volatile commodities become, and coffee is no exception. We've seen very, very sharp rains at some parts of the world and absolute drought at others, and that is not good news for commodity consumers who are often subject to very strong volatility in prices. Mr. Jaipuriar, let's dig a little deeper into CCL products. You've been a very, very good wealth creator for shareholders over the last 10 years, and we'll show some data to our viewers when it comes to how CCL products has created wealth over the longer term for stockholders who've remained invested for a decade. 10-year CAGR is 37% for CCL products, which means that each year over the last 10, the stock has appreciated by 37%, given the dips that markets correct, which is fine, handsomely beating the S&P small cap index, which has compounded at 21%. So huge outperformance, and that's because of the moat that CCL Products has in terms of EBIT margins fairly high, 18-17% over the last 5 years. Mr. Jaipuria, what would be the new product launch that you would be having over the next year or so, over the next 6 months, 2 years, where you can protect this moat of higher EBIT margins?
So if you historically track our performance, one of the key reasons why we probably have been able to do well is the introduction of new products in the market and for our clients. And we generally, keep on doing a lot of innovation so that we beat the curve of the market. And that is one of the competitive edge that we have created in the market for quite some time. And as far as new products are concerned, see, we are always, in the process of making new products. Our R&D is always at it. Today, because of that mindset, we have around 1,000 blends in our portfolio. So that's the mindset we work on, because for our clients it is important that we keep providing them with new products, because that helps them to perform better in their markets as well. And therefore, we believe that we probably are just not a coffee company, but a solutions company for our clients. And so therefore, coming back to what new products are coming, see, we have been working on a lot of products. There are certain products we really can't comment on right now, but things like we have spotted trends of specialty coffee emerging in certain coffee markets, and we are in the process of developing some of these specialty coffee ranges which we could offer to our clients. And because of that, we also have set up a mini plant so that we could offer smaller quantities to our clients and be more client friendly when it comes to things like MOQ of coffee. So these are certain things that we are doing. We continue to work on things which have given us success in the past, like instant cold brew, etc. Through our innovative technological setups that we have put in our factories. So all this is helping us create all the time a new product, and make sure that we are always offering something or the other which is new for our clients.
Fine. Let's go to the balance sheet and try and understand how it will shape up over the next 2 odd years. Mr. Jaipuria, you have a debt of about 900 crores. While this is used for working capital and other processes, short term in nature, what's the outlook on debt? Do you plan to cut it down, or is expansion demanding more loans to be taken? How do you see the debt profile over the next 24 odd months for CCL Products?
So the debt profile will be a little on the tighter side. So when I say so, there are two reasons for it. One is, our working capital requirement because of the coffee prices that have gone up. For the same amount of coffee to hold, I probably need a little more working capital than before. So, and that is leading to a higher debt requirement when working capital comes. And long-term debt, yes, we have been rapidly expanding our capacity, which requires long-term debt. So going forward, at least for the next year or so, our debt equity ratio will remain closer to 1.1 is the expectation that we are having. Post 25, the debt profile will start improving, in the sense that a lot of debt servicing will start from there. A lot of free cash flows will get generated, because the business would have gone up and we would have started realizing higher profits. So that's the time when the debt profiles will start improving. And 25 onwards, we see that for the next couple of years, because we don't see any immediate expansion till 27, 28 now, because the current expansion will take care of our growth plans till that time. That's the period when probably we'll start getting the debt equity ratio back to 0.6, 0.5 levels.
Fine. And in front of you, as a graphic format, is the fabulous performance that CCL Products has given over a 10-year period. Remember, it's accompanied by ups and downs in certain months, certain quarters, certain years. But the harmonized 10-year CAGR performance of CCL Products stock is about 37%. It's beaten the daylights out of both indices that are there in front of you. And that's because of a very strong brand, very high ROC, very strong ROE, and of course a moat around the EBIT margin and all. Mr. Jaipuriya, I've always wanted to ask this question from a coffee maker and a coffee seller. India is primarily a tea drinking country. We consume millions and millions and millions of kilos of tea on a daily basis. 140 crore people really love their tea. Coffee is seen as a premium product meant for the middle class and the upper middle class. Are there any signs that show for long-term industry watchers such as you that things are turning better for coffee in India?
So if you see if I were to divide the world into two halves, one half is a coffee drinking half, and the other half is the tea drinking half. And if you see a lot of these Asian economies, Asian countries have been tea drinking countries. If one were to see some patterns emerging, you'll see some of these markets like the Korean market, the Japanese market, the Chinese market. They're all converting very fast to coffee drinking because the next generation is probably adopting coffee as their preferred hot beverage than tea. And it all starts from a lot of consumption being driven out of home. So we have seen this pattern in both in all of these economies like the Chinese economy, the Korean, the Japanese, and even the Southeast Asian economies like Vietnam, etc. You've seen a lot of out of home coffee consumption being driven as the first phase, and then it takes a generation to kind of get hooked onto coffee beverage, and then they'll bring it back in home. So we are expecting very robust growth in all these markets, and India is actually following a very similar pattern. If qualitatively, if you see around you, the number of coffee chains and the coffee shops that are coming around us is a marker of the fact that the out of home coffee consumption is really going up. And once the new generation, because they will experiment coffee, they will drink coffee at these cafes, and once they drink cafes, they get used to it. And this is the new generation who probably instead of converting to tea will probably convert to coffee. So next decade or so, I see a lot of coffee consumption being driven out of home, and then subsequently next 2 decades we'll see a lot of in-home consumption being driven because people would have got used to coffee by then. So I think that's a pattern that will happen in India as well, and therefore we are very bullish about coffee sector growing very handsomely over the next few decades.
Thank you so much, Mr. Jaipuriya. You have our best wishes for the growth in the coffee market, and I'm sure the generations that come in really don't care about what the older generations are consuming. They have their own choices, their own taste, and their own brands to look at. Thank you so much for your time, and we hope that the fantastic CAGR that CCL Products has given over the past decade continues for the decade ahead.
If you like the video, do like, comment, share and subscribe.